What's going on, my friends, my people? What's going on in the hood? I am back in town. I'll tell you what, the New Orleans did a little number on me, but I am alive and well. That's a dirty town, man. Nobody should ever go there. If you go there, you should go alone. And what are you going to do? But it's good to see you, Nicole. Muno, how you guys doing? Let me know where you're coming in from. Good evening, everybody. Welcome, guys. So this is November 1st, 1982, recording. I've been doing these webinars. I've been playing this same webinar for 42 years for whoever wants to know if it's recorded. I mean, use this webinar since 1982, man. I'm just teasing, man. I'm just teasing. Let me tell you something about pre-recorded webinars, guys. If you try to buy a class from somebody, and they don't even have the time to give you 10 minutes, why would you ever give them 10 minutes? The pre-recorded webinar is the biggest scam in marketing. I mean, yeah, you make a little bit more money because you can run it all damn day, but it's still a scam. Guy can't give you 10 minutes, he ain't worth their time. So we got Colombia. Oh, that's awesome, Elsa. I spent a lot of time in Colombia. Cartagena, Colombia. Canton, sweet. That's awesome. Home of Pro Football Hall of Fame. Alaska, good, good, good. Oh, Delhi, man, we get a lot of Indians over here. That's awesome. Love that. Ecuador, a pleasure. Nashville, okay. London, good. Man, Karen, you're from London. Sammy, you're from London. You guys should be hanging out. Cool, United Kingdom. Hey, Karthik, what you doing, man? Good, Alberta. And my business partner, Josh, is from Alberta, I think. He says Edmonton, but sometimes he says Alberta. Who knows, right? Canadians are slippery butts. You guys get by with your good looks and nice smiles, but we know what's going on. Philippines, good, good, good. Monique, how are you, darling? Tufik, my friend, good. Well, I won't waste too much of your time with the hooting and hollering. Always excited to see everybody. I am giving you just a quick warning. I'm over here in Florida. It's like you're going to hear like all sorts of random stuff out there. There's like a monsoon going on over here. I mean, there's like chairs flinging against the house and stuff. So if I lose internet, I got battery backup and all that stuff, and I got my trusty backup internet, which all traders should be using. But if the net goes out, just give it like 2-3 minutes to just let me kind of restart the thing, and then I'll be right back on. This thing is alive and cooking. It's got a few hours of batteries, so I won't let you guys down. But I did want to let you know. We're in a monsoon and we've lost power like 2-3 times. So the show must always go on, but it may be delayed for a few minutes. Guys, let's get started. I know a lot of you guys will have tons of questions. I will answer everybody's questions at the end of the day. I know that trading itself, it can be so darn confusing sometimes, right? Like, what do you do? Where do you start? How do you learn? And I want to make sure that, I talk about my processes with you, but of course, answer every single one of your questions at the end. And there's no such thing as, a question that's not good. So whatever's on your mind, just say it. And I'll make sure at the end to get to everybody. If I miss somebody's question, don't feel bad. Just re-ask it like, a few minutes later or something. There's a good shot that just with the stuff rolling, I missed it. And I'll tell you what, there's like 50 Indian dudes in this webinar, and my people ask tons of questions. You know that, right? They hear a free webinar. They're coming in hot with one purse full of popcorn and Diet Coke and another purse full of questions. That's just the way we roll. So that's what we got to do. Let's get to work and let's have a little bit of fun. We'll try to learn something. We'll tell a couple jokes. We'll answer some questions. And remember, this is a 2-day webinar. Coming in tomorrow is going to be really, really important, I think, because we're going to start building a little bit more advanced strategies as we go on. So, you know, we'll have an agenda, but day 2 is usually where we kind of layer on after the beginning stuff. So you want to make sure, no matter what, you're here for both days, but tomorrow's going to be really important. If you see a young man named Josh, you know, typing to you guys, he's my business partner. He's one of my students, but he's also a really good trader, and he'll answer all your questions and make sure you guys are situated just right. All right, so let's get started. Let's talk about learning the trading mechanics, which is probably one of the most mind-blowing things I've ever done because it can be so darn complicated, but it doesn't have to be. So let's talk a little bit about our agenda. Today, we're going to go over understanding the basic trading mechanics. What is technical analysis? How to set up your charts. We're going to talk a little bit how to guys, are we back? Cool, cool, cool. Told you that net was about to go out. You guys, I really apologize. I prepared them. we've got backup, but we just went out of power. We lost internet. I'm moving over to the MiFi card. I think we should be good to go. I always knew this thing was going to come in handy. Don't worry. Show must go on. So let me just start this over just so we can start. You know, we're going to start day 1 learning basic technical analysis, how to set up your charts, how to scan for the top stocks to trade, right? How do we pick 8,000 stocks, from 8,000 stocks, the best 2 or 3 that fit what we do, how to read trends, and then, of course, how to find support and resistance. So those are kind of the basic stuff that technical analysis is all about. After that, we're going to get into a little bit more advanced type of stuff. So what we'll talk about is a couple patterns that I've been using for years to trade in the morning and the afternoon, right? That kind of that 9:30 to 12 p.m. spot. We'll talk a little bit about proper technique for entering and exiting trades, how to define your risk for max rewards, and then we'll start digging into some real life trading examples that I do every single day, and we'll kind of reverse engineer them. So, you know, in my chat room where I'm trading live in front of my students every single day on a webinar just like this, you know, we dissect what the heck went on during the day. You know, some days I win, some days I lose, some days I win a lot, some days I don't ever lose a lot, but I lose, right? And so we always reverse engineer them. It's a great way to learn. Then we'll get into a little live Q&A and have ourselves a little pizza party at the end. I'll bring the pizza, you bring the beer, we'll be good to go. All right? And then stick around until then for a special offer for everyone who signed up. And then, of course, we'll get into the Q&A. So for those of you guys that are unfamiliar with me, I'm the head janitor of this place, Canal. I'm the CEO. I have been trading my whole adult life. I started this business 10 years ago. Time flies, right? Josh here, who's answering your questions, he was not even a teenager when I started this business. And, here we are still cooking 10 years later. So it's an extreme privilege to be able to trade and do what we do. And I'm excited to teach you guys about it. I've been trading stocks professionally for over 10 years. But man, I've been thinking about trading, trying trading, practicing trading, failing at trading for many years before that. Man, it's such an ugly journey when you're doing it alone, when you have nowhere to go, and you're really unsure of how all the information kind of meshes together. And that's how I was when I was a new trader. I would watch videos and blogs. And by the way, when I started trying to learn this stuff, there wasn't YouTube around, right? I mean, you were doing all sorts of other weird stuff, going on Yahoo message boards and all sorts of stuff to figure this stuff out. But finally, when I was able to put it together with my mentor, we were able to build a more cohesive system of learning for people that wanted to do it. I've been a speaker all over the world, Japan, London. I mean, you name it, I've been there talking about stocks, talking about cryptocurrency, and pretty much anything trading related. I've literally taught thousands of students how to do this. And I trade a momentum-based trading style, which I believe is the best way to trade for anybody that's trading less than millions of dollars. So if you're a retail trader, somebody that's trying to take a small amount of capital and grow it with discipline and by managing risk and going for bigger rewards, then trading momentum is the best way to do it. And we'll start discussing those strategies today. So our trading styles. Let's talk about trading styles. So in trading, there's a lot of different ways to trade. You have people that are investors, right? Like Warren Buffett. Or, you have people that are long-term trend traders, like William O'Neill, one of the most famous trend traders of all time. There are people that day trade. There's all different styles of trading. Where people often fail is when they try to take a little bit of a concept from one, and then they read a book on another, then they watch a video on another, and they read this blog post on another, and they kind of try to corral it together into this just random hodgepodge of what? You have too many different pieces of information, right? And when you try to build a house on a weak foundation, what happens? So we have a very specific trading style that can work on all time frames, but they require stocks or markets that are trending. And the beauty of stock market is that there's always a trend somewhere. And this type of stuff works in crypto, which I've traded successfully for the last 2 years. It works in Forex, which is not as fun and kind of sucks to trade. It works in futures, which I love trading, especially NASDAQ futures. I focus on trading just the first 1 or 2 hours of the market and try to finish by at least lunch. If I usually stay after that, it's because the market's just really hot and I'm seeing opportunity all day. But as you guys know, in the US stock market, the open is hot, midday is not, and end of day could be a go, but more often it's a ho. End of day stinks, midday stinks. That open is really where the action is. And so we want to be just really focused there. And then the rest of the day is gravy if we see the opportunities there. I like to scale in and out of my positions. I sometimes hold positions for a few minutes, sometimes a couple hours, at max a few days. There's two different types of trading. There's day trading and swing trading. I teach both because I think you need to do both. Long-term trading, like the one you're holding for 3, 4, 5, 6 days, are really good for generating wealth, building accounts, and short-term trading is great for trading for income. So as all people, trading is a job. So we have to build for income to pay bills, but then we have to generate wealth for long-term. So we have to learn how to do both, and we need to learn how to do both. There tomorrow I will be showing you one of my go-to trading setups, which is going to be really, really important. So what we want to be doing is talking always about trading. So what's a trading setup, right? A trading setup is a list of conditions that must trigger before a trade is taken. Let's talk about what is technical analysis and why do we use it as day traders. Technical analysis is the process of using data and charting to identify levels of support and resistance for finding areas of buyers and sellers. What it allows us to do is mitigate risk, maximize our rewards, but it gives us a system for actually governing our trades. So there's two types of traders. And guys, give me a hands up if you're just like brand new and you don't know anything about trading, because I'll make sure to, get you guys a little bit of beginner info at some point, with the verbiage and stuff like that. So if any of you guys are just brand new and you don't even know what the heck technical analysis is or trading patterns is, let us know and I'll make sure to have somebody reach out to you about that stuff also. So what we want to be doing is understand there's two types of trading. There's fundamental analysis, which is having fundamental data, right? Fundamental data means like you're looking at balance sheets, you're looking at reports, and trying to figure out the future of a company. Well, as a day trader or a short-term trader, stocks don't move on fundamentals. They move on news, they move on sentiment, and they move on momentum, right? If I wanted to learn about a company and what's going to happen over the next 2 years, I would learn fundamental analysis, right? I'd learn like Warren Buffett and try to analyze the company. But if I wanted to buy a stock at 5 and sell it at 8, do I have to know everything about that company? No, right? I just need to know at what point is it going to go up. We use a program called TC2000 for all our technical analysis. So TC2000 is just a charting platform. If you go on their website, Josh will put a link in. They have a free version. You can download it and follow along. I know a lot of you guys are coming into our bootcamp class that starts next week. I'll make sure to get you my layout. So let Josh know if you're coming into class next week, and just leave your email, phone number, and he'll make sure to get you all the layouts and scans and all this. So when you're looking at charting and you're looking at the stock market, what we always got to be thinking about in technical analysis is the technical analysis is just the art of drawing patterns. So what we want to be doing is looking for inflection points in stocks where a stock may go up or a stock may, frankly, go down, right? And so you have fundamentals, which is studying the stock, and technicals, which is about studying what has happened on a stock and then observing its behavior and trying to extrapolate what could happen next by using chart patterns, which is just a list of conditions that must trigger before a trade is taken. For any of you guys that are coming into our next class, make sure to put in your number and email. Josh will get you all those scans because you're going to need at least TC2000 or FinViz or one of the charting platforms to be able to roll through class. Now, I'll have a class on how to set it all up and all that fun stuff. And I make sure everybody gets my layout. So don't worry about all that stuff. I'll make sure to nail this down. So how to set up your trading charting software. This is going to be really, really important. So I'm going to give you kind of a base understanding of what happens on a chart. All right. So say you've got a blank chart. I'm just going to X all this junk out, right? So say I've got myself a blank chart. Hold on here one sec. Let me open up a blank chart. Hold on here. All right, so say I've got a blank chart. And I need to figure out what the heck it goes on a chart and what it all does. I want you to come in and just delete all this junk over here. Hold on. So go in here. I want you to type in, what's a hot stock we trade these days?
Texas.
All right, so let's put in AXS. This is a stock that we trade right now. All right, so now I want you to kind of delete all this stuff, and we're going to just set up our charts so you guys can see like what goes on a chart. So the first thing that we always add on a chart is candlesticks. So I want you to go in. If you've already downloaded your TC2000, cool. If you haven't, don't worry. We're going to send this as a recording, and I'll make some additional videos and get you all the layouts anyways. I wanted to show you how all the indicators work. So go to this plot style, hit candlestick, and then go color based on here. I want you to do net change. So now you're going to have like these red and greens, right? Now leave all this blank and just hit OK. So what we're doing here is building out what a chart should look like. I'm going to describe kind of what every single one does. So these green and red things, what the heck do they mean? Anybody know? They're candles. Good, Andrew. Good, Starkia. So what these candlesticks are is they tell you essentially a story about the stock for that particular day. But I'll give you the short version. And you're right, Alex. I'm going to give you the short version. Candlesticks describe what happened during the day on a particular stock. So like, for example, today, this excess was at $76 at one point, and it got up to $81. So it's giving you an idea of like kind of what the range of the stock is. Does that make sense? So like at some point it was at 76, and at some point it was at 81. Make sense? Good. Now, on the other side of things, green candle, red candle, what do they mean? A green candle just means that the stock is up on the day, right? Like it's higher than the previous day. Makes sense, right? Green is always good. Red, the color of blood, right? Red, it means that a stock is down on the day. Red means that the stock is down on the day. So when you have a stock down on the day, you're going to get a red candle. When you get it up, it's green candle. And if it's a filled candle, what that usually means is that the close is lower than the open. Remember, there's a range on a stock. There's where a stock opened at 9:30 and then where it closed at 4 o'clock. All right. Now, so now you've got these basic things. All right. Now, what I want you to do is like, see on your scroll button, right? You can kind of scroll back. So I want you to kind of go back a little bit of time so you can kind of see the last 6 months of data. Now get this, we're going to add in some indicators. Mike, I'll make sure. So hit this plus button here. And you can do this on any charting platform, guys. And I know I'm going to blow through this because frankly, it'd take 4 hours for us to get through every single piece, but I want to make sure I do a good job. So I want you to hit this button, type in moving, and it's going to say add moving average to, and just click this excess. So now you got moving. I want you to type that in 4 times. But for the next 3, I want you where it says moving average simple versus exponential. So type that in, and it's going to say add moving average to, boom. I want you to just write this 3 to 4 times. You guys remember, this will all be recorded. I know I'm going a little fast, but we got so much stuff to do. I don't want to bog you guys down if you can rewatch this at some point. I'll make sure to get you guys a recording. Now I want you to hit this one more time. So now you got 4 yellow buttons, right? So this is not going to do you any good, right? But what we want to do is change around the settings to this, all right? So edit this first one. I want you to edit it. And see now where it says editing, I want you to change this to a 9 period. So what a 9 period is a 9-day moving average, all right? So it's going to say 9. And when you edit it, change this color. I always like to keep my 9 EMA at like a light blue. There's nothing better than a baby blue, right? I got you, Johnny. Nothing better than a baby blue. So you got a 9-day moving average. Good? Now just click this second one. Get this out, baby. By the way, our power went out, so there's no AC, so I'm sweating. So if you see like, I'm like, a pimp in church, It's because our AC's out. That power's come in and out twice already in the webinar. So you got 9, 20. Now this one's going to be 50, right? So I want you to click this. I want you to change around this color, though, to like a nice purple. Does that make sense? We got 9, 20, 50, and then this one, I want you to edit it. Click 200. It's a little dark, ain't it? Let's go with a nice like orange. What do you think about that? So we've got a 9 EMA, and you're right, Charles. The rest are SMA. And I'll tell you the reason. When you're talking about momentum trading, this has really only happened the last couple of years. The 9 EMA has been like the #1 indicator for like deep momentum. Like when a stock gets really, really hot, you will see it really hug that 9 EMA like gold when a stock gets in a deep trend. And then usually when you kind of break back under, the trend starts to reverse on a short-term basis. And then, you know, you have to kind of relook. And that's just one way we use it. But what these squiggly lines mean, right? It's crazy, right? Like, what the heck do these lines mean? They're just kind of crisscrossing around right now, aren't they? They mean nothing. But they also mean something, all right? So 920, 50, 200. So what the heck does this all mean? So let's talk about this in... There we go. Cool. So let's talk about what these moving averages mean. Now, I'm sorry, I'm not a slide guy, so I'll mess around with it. Hold on here. Let me get to my Google Drive. My dad always taught me one thing. The guys that work for you make the slides, right? One man makes the classes. The guy that works for you makes the slides. Let me get myself a little Google Drive. If I could turn back time, if I could find a way. Who knows that song? That's a nice song. That's a trader song right there, by the way. All right. And the EMA means exponential. So, moving averages. You got a 9 EMA, 20 SMA, 50 SMA, 200 SMA. So those are simple moving averages. Then we got a 9-day moving average. So what do moving averages do? Serve two functions, right? One is for support, resistance. What I mean by support and resistance, anybody familiar with the concept of support and resistance? Support and resistance is essentially spots on a chart where demand may flow in or supply may flow in. That's all. So support and resistance, support is where demand may come into a stock and actually hold it up. Your resistance spots are areas where supply may come on a stock and push it down. And so resistance is an area that can cause a stock to go down. Support is an area that can cause a stock to go up. So just simple stuff. Now I'm going to explain it more in detail because I know that's a little pedantic. Is that a proper word? I think I just made that up. Whatever. That sounded cool as hell. The other one is trends. Your moving averages can help you spot trends. So your 9 EMA is your short-term trend. What it will measure is your short-term trend by the slope. So when the slope is higher, it means that the short-term trend is high. When the slope is down, it's essentially telling you that the short-term trend is lower, right? And you can do that on any stock around. So when you get a nice trending stock and your 9 EMA is really pushing higher, that means that the stock on a short-term basis is in such a strong trend that, right, prices can really explode. And vice versa. When your 9 EMA starts to roll down, it tells you that at least on a short-term basis, the trend is in jeopardy. It doesn't mean that stock is going to crash. Sometimes stocks will just consolidate for a period of time before they go back up. Those resting periods are okay, but it's a good indicator for understanding what your short-term trend is. And that's going to be really important. We use it a lot in day trading also, which I'll show you in a little bit. So 9 EMA, short-term trend. Good. I got you, Araby. You my brother. You know I ain't going to forget about you. Now, what the heck does the rest of the stuff we want to do on a chart? So I want you to add in one thing, volume. So type in volume, and by the way, you can do this on any charting platform if you're just coming in. Click this volume. Wrong one. Hit this plus button. Sorry. Click volume. So now you got this showing up. All right. So what volume does is it measures. No, John, not at all. What volume does is it measures exactly what's going on in terms of the buyers and sellers for that particular day. So what volume is doing is telling you how many shares were sold for that particular candle. And that's going to be super important because in general in trading, what we'll do is use volume to measure a few things. Volume tells you a handful of things. Well, number one, it tells you about liquidity. Number two, it's going to tell you about your ease of getting in and out. Number three, it's going to tell you about accumulation. And then most importantly, volume tells you really about the emotional intensity of traders, right? It's going to tell you about how bad people want it. And so each candle represents how much volume is essentially traded after that particular day. So yeah, you'll have the price and volume match up, of course, even when you're day trading. So when we're day trading, we use 5-minute charts, right? And each candle will represent 5 minutes. So same type of deal. Long-term trading, short-term trading are very, very similar. We'll talk a little bit about day trading in about 5 minutes and kind of govern into some trades. Now, so we got these kind of handful of things, all right? So now let's talk about support and resistance. What the heck is support and resistance and why is it important? So support and resistance are areas where sellers historically have to enter a market. So supported areas are where buyers have to come in, right? They're areas of demand. Resistance is the opposite. So how are these things measured? So there's two measures of support resistance. One way is price. Price is most important measure of support. Two, moving averages can be areas of support. Stocks can often bounce off moving averages. Not always, because that would be crazy, right? Imagine if you just had a stock and it's just always bouncing off moving average. No, but how you want to think about trading is like this. When you think about trading, think of it as like you're like a lawyer and you're building a case. You're building a case for why you should buy or sell a particular stock. So what you want to do as a lawyer is what? You have to build a case. You have to align pieces of evidence in your favor to get in and out of a stock. Why is it worth your mental or emotional capital to get in or out? And so what we want to do is apply pieces of evidence. So number one, we always start with price, right? Is price trending or not trending? Number two, like what are the price patterns? So we're going to talk about a couple different patterns tomorrow on why you would get into a particular stock. Then you have your moving averages, you have volume, you have different things that you start to overlay on a stock to build a case. And when you have that, That's how you get into a trade. So when we think about support and resistance, you know, what you'll often see is it's a battle line. Battle line on a stock. You're going to have, if you ever see on like particular stocks, there are like levels that are holding the stock back. And it's going to be just crazy, just holding the stock, just crazy hot. Now, why would a stock do that? Well, there's going to be invisible areas anytime you get into like a particular trade. So what we always want to be doing is thinking about, you know, where on a chart is there some heat going, where there's a lot of action taking place, because those can often be inflection points that we frankly trade around. So when you think about like support and resistance, I want you to think about it like this. So like, look at this chart on, this is Ethereum. So we trade a lot of cryptocurrency on top of stocks. So what you can see on Ethereum is oftentimes you will have a level that starts to build. So like, notice how this stock comes all the way from like $50 to $400, right? And then it starts to come all the way back. Then you start to pop your way all the way back to $400. Now, resistance means, right, it resists. So old highs or old levels that a stock used to be at, usually the second time you come back to that level, it ends up being resistance, because you have a level of supply at that level. See, the people, imagine you're this guy, you're Bob, right? And you and Bob bought all these shares or coins at $400. So the next, what does Bob do when the stock comes crashing back down? Like, what do you always say to yourself when you get in an investment or a trade and it comes crashing back down? You think, man, when I get my money back, I'm going to sell it, all right? That's what we all think. When we get our money back, I'm going to sell it. So what will happen is oftentimes you come back to that level, and all these people that bought up here say, oh, man, I thank the Lord I got my money back, right? And they're selling. And so there's a level of supply there. But what happens is, like, as levels build, and every time you test a level, more supply is sucked up. So what happens is when you test a level, you soak up some supply from over here. And then when you test it, and it's usually the third or fourth time, when you test it again, you've soaked up all that previous supply, and now you can go and have a true move to the upside. So that's what a breakout is. If you guys are familiar with the concept of breakout, all a breakout is when you test a level of resistance multiple times. You need 3 tests minimum to break a level of resistance. And that's what trading is all about, right? It's levels of support, levels of resistance, and how they interact with each other. But we use breakout trading all the time. And that's the most simple pattern that you can trade, but you need 3 tests. Remember that a level of resistance is like a barn door on a stock, right? It's a lid. You're in a pressure cooker, so you can test it one time, right? And maybe the level gets a little weaker. You get tested again, and the level gets a little bit weaker. And then you test it that third time, and that level gets a little bit weaker. And what happens is you're building up that pressure cooker, right? You ever see this in day trading where there's a lid on a stock? And you're hitting it, and you're hitting it, and when you finally break over, what happens? Explosion. That's what a pressure cooker is. And that's how breakout trading works. And so we're always monitoring levels of resistance and support, because when they test, and they test again, and they test again, hot damn, that's where the explosion comes in to so many types of trades. So you always want to be just monitoring that, because, I mean, frankly, hot damn, right? That's life. So when we think about resistance, you will see often on charts levels getting built that are holding down a stock, where you come in and you test it, and then you come in and you test it again, And then you're going to come in and test it again. Now, the question is this. Does anybody know why it doesn't break here? This is the third test. Does anybody know why this stock doesn't break out right here on this resistance point, meaning explode to the upside? Because it should, technically, the way I just told you. Your 9 EMA is too far. See how your 9 EMA is here? So the breakout here is at, let's say, 34. Your 9 EMA is too far. In trading, real breakout trading, I'm talking about what the pros do. They understand that if a stock is tired coming into resistance, it's just going to come back down. Anytime you're tired, meaning you just run up too far into resistance, a stock will come back down. Remember that the break, remember this for the rest of your life, the break over the resistance level is the beginning of a marathon. It's a beginning of a marathon. The longer the resistance pattern is, the longer it's going to run when it breaks. It's the beginning of a marathon. So what would happen in life if you ran a marathon before you started your marathon? You'd be out of the game, right? That wouldn't work. And so what we do is we use our 9 EMA to indicate to us when the pattern is really tight and the stock is rested so that it can break out. And that's going to be really, really important, guys, because stocks get their power from consolidation. They get their power from basing. Those resting periods is what allows the stock to build up steam. So like when you read your technical analysis books, right? And they say, oh, buy the stock because it breaks out over resistance. What you've got to always remember is that if it's too tired running into it, it's not going to work. And so what we need to do is have a really, really rested stock, but still breaking out our resistance. So see when it breaks out here? Look where the 9 EMA is. We call this the curls for the girls. What we want to do is see it just curl up right up under the stock, right up under that kitchen, right? When you get the curls for the girls, right up into the stock, see there's nowhere to go. Remember that moving averages provide support and demand too. So this thing is curling up. And you got tap, 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 tap. You're building up pressure, right? You're building up pressure to break out. And then you got your 9 EMA curling up under it. Now your risk is really small. So like how would you get into a trade like this? Well, when it starts to break, I'm going to buy my position. I'm going to put a stop loss under my 9 EMA. So very simple. So I'm going to buy. I set a stop loss to manage my risk. And now I'm into a pattern that can run for months. Remember that this is a multi-month pattern, right? It went for almost a year. So you're going to be holding this thing for a while. Pretty cool, right? Now, on the other side of things, look, that's a long-term trade. Some of you guys are not going to want to hold long-term trades. The beauty of day trading, guys, is that long-term, short-term, all the same pattern. So like, for example, today, what was that stock we traded, Josh? Hold on. Open up my little trading platform. Cool. So today, let's see here. I made $1,300 on this TVIX using the same resistance pattern that I would do on a longer term trade, but I do it on a short term trade. So how do you do that? Well, when you think about trading, right, day trading is just a 5-minute chart. Check this out. So on your 5-minute chart, you know, I had been watching this thing. So by the way, we use TC2000 to find these trades too. So I've got scanners running, like little programs that show me like what's moving hot. No program will ever tell you signals on how to buy and sell. That's all garbage, right? What we need to use our software for is to just tell us what are the best stocks to potentially trade today, but we still have to apply our patterns and support and resistance on it to get in. So like that Twilio trade, right, which was a long-term trade, which was right? Multiple tests of resistance, but it's usually 3 tests or more. So you can do the same kind of pattern intraday. So what you'll see here is like this Twilio, it had tested this 52 level one time, and then it comes in a hot second time. And like, you know, we took this trade in the chat room today, and it was just the simplest of patterns. Hold on here. Now my lines are getting drawn a little bit funny. There we go. 1 test, 2 tests, 3 tests. As this thing breaks over the 9 EMA, over this over this resistance point of the 3rd tap, I'm going to put my stop under the 9 EMA. So same type of thing as when you're doing a longer term trade. But a day trade is you're just going to hold something for maybe a couple hours versus, right, a couple months. So just a little bit different, but that's what support and resistance trading is. You know, and it's a basis of everything we do. There's a lot of gimmicks in trading and a lot of patterns. I trade 18 patterns, but that 3 tests or more, that's the whole basis of everything that we do. A resistance point will resist till you test it enough, and that 9 EMA curls for the girls, that it breaks because it's just got nowhere to go. And it's always been. That's a pattern I use every single day, my whole darn life. And you know what's funny? You can actually do it to the downside. So like there's buying and selling, there's buying and shorting stocks, right? So shorting a stock that's just betting on it to go down. That concept always used to blow my mind when I was new. You know, I was trained coming from the Midwest, you know, it's just buy and sell. You buy something, you hold it, and right, you sell it someday. You know, betting on stocks that go down was like, it just blew my mind. I didn't even know it was possible, right? And then, you know, one day I'm like reading these books and there's people making money on short selling, and, you know, the concept is the same. So like this docu, right? You can see here at this 52, this huge level gets built at $52. You see that? So you're going to test it. Then you're going to test it. And you're going to test it. And you're going to test it. You're going to keep testing this level. Notice how you keep testing it. Why does it not break below that level? Like, why doesn't it here? Notice how here, like, it kind of peaks under the level. Why doesn't it do it there? Anybody know? Your 9 EMA is not curls for the girls yet, right? It's not coming down on top of it. Too loose. Loose patterns mean failure. Anytime you trade a pattern that's loose, the odds of failure are very high on a probability basis. When you get a tight pattern, explosion sets in. But more important than explosion, your risk is managed. You know exactly where to put your stop loss, but it's going to be tight. And so even if it doesn't work for you, who cares, right? Your risk is so managed. So it breaks under here. We know that's not going to work, right? Then this thing comes back, test it again, right? Still not going to break. Look, the breakdown is at 52. Your 9 EM is at 54. That's $3, man. Too much, right? That's a lot of risk. So this thing comes down, 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 down. See when it finally breaks down? Look where this 9 EMA is. It's coming right up under the kitchen, right? Right up on top of it. It's going to tell you that the pattern is tight. And always remember, if it's tight, it's right. Right? So now you can short it, which means you're going to bet on it to go down. Your stop is going to go above that 9 EMA. So now your risk is really low. Look, in the end, say you had a small account, right? And you're like, I'm going to short 100 shares of this thing at 52. And your stop loss goes at 53. What's your risk? Who knows what the risk is on a trade like that? What's the risk on the trade like that, guys? Good, Charles. Good, Derek. It's $100. In the scheme of life, if you lost $100, would you care? Yeah, it stinks. I mean, nobody ever wants to lose money. But in the scheme of life, if somebody told you you could risk $100 to maybe make a few $100 or more, then would you be pissed about it? No. You would risk $100 every single time. And that's what happens when you look at support and resistance and you trade around it and you get that 9 EMA curling up under the kitchen, making sure the pattern is tight. You limit your risk to a level where you're not going to necessarily care too much if the trade goes against you. Like when I lose on a trade, yeah, I don't like it, but I make sure I never lose so much on a trade where it ruins my day, right? Where you can't go out and hang out with your friends or your family, right? Some of you guys got kids, right? I mean, you know how it is. When you lose too much in trading, man, you see your kid bothering you, you're like, gosh darn, is he even mine? Right? Like he can't even be mine. He's so annoying. So we don't want to get to that point, right? We want to make sure that we have tight risk. We got good reward on these potential trades. And so trading around support and resistance is going to be really, really important. We're going to dive real deep into some patterns tomorrow, but I wanted to just kind of start introducing you to stuff that we're going to be doing. Listen, 95% of traders blow up their accounts all the time, right? Everybody, I've blown up 3 or 4. Shoot. Some of them, what's funny, when you blow up accounts, like I blew a few of them when I was brand new. Then heck, even like 5 years later, I blew up one. You know, at some point, when we risk money and we're just going in and doing what we think we should do versus what we need to do, we're always at risk of blowing up. But majority of people blow up their accounts for a few reasons. Poor risk management, right? Poor risk management, of course, which is, it's such a simplistic term because it's like, well, what the heck? What's risk management, right? Well, there's, poor risk management. Number one is not having tight patterns, right? Not EMA too far away. What else would be bad risk management? Not understanding the rules of the pattern. So only certain patterns use 9 EMA right up under the kitchen, right? Then there'll be other patterns like VWAP and stuff we'll learn tomorrow that'll use different indicators, right? So not understanding the rules of the pattern. 3, not having max loss per trade per day. So what I mean by that is like, on any given trade, sometimes, especially when you're new, like you're trading like a $2,000, $3,000, $5,000 account, you go in like you feel like you're willing to risk. Nobody ever goes in like that, but essentially people are willing to risk the whole thing. It's like, well, blah, blah, blah. Even when, no matter how much money you have, you must have a max loss on a trade. Like, what are you willing to risk on a trade? So, like, for example, say you have a $2,000 account. Maybe you're going to risk $50 or $100 on a trade max. If you had, a $40,000 account, you may say, okay, I'm going to risk $200, $300, $400 on this trade. Meaning if I get stopped out, that's what I'll lose. So not having set rules for that. What's the most you can lose in a day? Like if you had a $40,000 account, would you be really willing to risk and lose $10,000 in a day? Could you even survive like that? No. I think like max, right? For me personally, if I'm trading $40,000, my max risk for the day is going to be $1,000. If I lose more than 1,000, no more trade. Because once you get into those big bad days where you lose $3,000, $4,000, $5,000, they're really hard to make back. I'll tell you what, when you're winning, like say you're trading well and you're winning, you're like scaling out of your trades, right? You sell a little, you sell a little. But when you take a loss, you take the loss on the whole thing. So your winners are never technically as big as your losers. No matter what all the trading books say, it's just hard to get done, right? In theory, it makes sense, but they just don't, the numbers just don't work that way. So you just can't have it. So you got to have a max loss per day. And then what you need to do is really think about like busting slumps. Slump buster. Some of you guys, Derek, Sam, you probably go on huge cold streaks, right? What happens when you go on a cold streak in life? You need a good slump buster, right? Everybody's got a Becky Big Legs or something like that. You got to bust your slump with. You got to cruise out, meet a divorcee, right? Hook up with your buddy's sister. You got to do whatever you got to do to bust the slump. Trading is the same way. Everybody's got to get out of a slump. I always think if I have 2 bad days, I get real nervous because 3 days is a slump. 3 days can turn into 6 days, 7 days, 8 days, whatever. right? It's hard when you're losing to focus your mentality on being a winner, right? When you're winning, even if it's like $20, $30 a day, what are you doing? You're waking up at 5 a.m., you're doing your mantras, right? You're reading, you're FaceTiming your mom, you're helping old people, your racist neighbor, you're giving him high fives. The world is good, right? You're a profitable trader, a profitable person, you're feeling good. You have a few days of weakness, you're losing money. What are you doing? You're eating pizza, smoking cigarettes, hanging out in your bedroom, watching Netflix, thinking of not answering anybody's phone call, thinking about kicking that old man down the elevator and teaching your racist neighbor a lesson, right? The difference is there's a thin line between winning and losing, and it changes your whole mentality. So we can't get into slumps because it shifts our minds, and it's really hard to pull it back. You can pull it back, of course, we have to. It's our lives, but it gets hard. So what I think is, like, if I lose 3 days in a row, say I lost Monday, Tuesday, Wednesday, I'm not trading Thursday, Friday. You guys probably saw, for those of you guys in my chat room, about maybe 6 weeks ago or 2 months ago, I just couldn't get it going Monday, Tuesday, Wednesday. And the market was hot, but I was like breaking some rules. I wasn't sleeping much, and God knows what I was doing. You know, single man, you just do stuff. Creep around on Facebook and Match.com late at night, and throws your day off, whatever. But I lost Monday, Tuesday, Wednesday, and you got to make the call. Am I willing to risk turning this into like a big slump? Because my mentality would start to change, right? Or I just take a couple days off, have myself an extended weekend, hang out with some friends. I live on the beach here. Man, go to the beach, relax, go do your thing. All of a sudden, your slump is busted, right? So we all need a slump buster. For me, it's just doing a little relaxation, getting a little sun. Usually sun really helps. And then, of course, focusing on setups, patterns that are my A+. So this actually is really important because so many times, like when we're traders, we focus on the wrong stuff. When we're not trading well, we trade everything we can get our hands on. Anybody ever do that? Like you're trading and it's like, what can I get my grubby hands on? It's like, give me a little this, give me a little that. I'm in this and I'm in that. You're playing hot potato, right? It's like, whoa, I'm in this. And then you only have so much money. You see something else going and you're like, oh, man, I got to get in that. And I got to get in that. And you're playing hot potato with it. When I'm in a slump, I'm only focusing on my A+ setups. Like, what are the patterns that I statistically trade the best? We have to have statistics when we trade, right? So like for me, like I use a program called TraderView, and it's awesome. Like it takes care of like all my statistics and all that kind of fun stuff. And, I can go in and see like, any given day, like I can see like all my stuff, right? So like I can go in here and like I tag all my trades. So I'll be able to see like what I did, right? So it's like, okay, I made $500, but I paid $76 in fees. These are trades I can look into them and tag them, right? And that becomes important. Like you've got to understand, like, right, what you're trying to do. So, I need to see all these stuff and like make notes and do all this and tag these things. But I'll be able to like really, really check and make that happen. So like having that data, and I tag all the trades with different kind of patterns and stuff like that, that becomes like a big part of, what I need to do, and so that's how you're going to really bust your slump. If you understand what you do well, then you know how to bust a slump. So that's the most important part of risk management, right? Is having those rules. Now, of course, you have the bad timing, the entries and exits, which is like you're chasing stocks. Well, if you don't understand the patterns that you're doing, then yeah, you tend to always buy things too high. By rule for me, if I'm chasing something like 3 or 4 green candles in a row, most likely I'm chasing it. If I'm buying too far off my 9 EMA, most likely I'm chasing it, right? I know that I'm looking for inflection points and I've got to have really tight patterns for that explosion. And then, of course, you're trading psychology and influence on trading, right? Which is, we've got to discipline, but how do you build discipline? It's so like, you can read all the self-help, hooky-wooky books you want in the world. But in the end, like, discipline in trading is just about building habits. I was talking to one of my students, just 2 days ago, right? So Brian, I'm like, Brian, he's like, I'm getting so loose. I don't have any discipline. I can't get this going. I said, of course you can get it going. He said, no, I can't. Like, it's like, I just don't have any discipline. And, I've met Brian twice. So I always have the students over to my house a couple times a year. Yeah, I'm foot switching. I'm on Lords of Thunder. Hey, Taylor, how you doing? We back on? So look, we were talking about discipline. I apologize. I'm not joking when I say it's a monsoon out here. But we'll do what we got to do. Okay, cool, Richard. All right. I really apologize about all that. We got to do what we got to do. So we were talking about discipline, and a lot of times when you think you don't have it, and that comes in with your trading psychology. One thing to remember people is that, most of you guys pay your taxes. You're good to your kids. You show up to your work, right? You're nice to your friends. That all requires discipline too. And so you have discipline in a lot of things you do, right? Like a lot of you guys go to the gym. Well, that requires discipline. You know what I've been doing the last week? Sitting on my butt, drinking booze, doing all sorts of stupid shit, right? Some of you guys are out there showing discipline. There's a lot of stuff that we do in our lives that have intense discipline. And so if you're already doing that, transferring it over into your trading, it won't be a big deal. It's sometimes we make it a big deal, but we can get that done because you already are disciplined. That's really frustrating too, because I always think about like kind of my beginnings as traders, and I was like, man, I'm just so lawless sometimes. Like I overtrade, I chase everything, and like every blue moon I start gambling and doing stuff. And my mentor Paul taught me something. He goes, he gave me this speech. He goes, he goes, you're working 12, 13 hours a day at your job. You're trading. Then you're spending an hour or 2 hours with me every single night. Then you're going and doing your homework. He's like, you're sleeping like 4 hours a day. I'm trying to learn this while doing a kick-ass job at your work. He goes, you are disciplined. He goes, you're just not disciplined in this. But we could change that. And the discipline comes from just building good habits. If you can do something the right way, just a handful of times, well, guess what happens? All of a sudden it becomes a habit. Like I leave myself sticky notes. Even to this day, I leave myself sticky notes to this day to give myself reminders. I got 4 monitors over here, guys. I got sticky notes all over these places to remind me. Not all the time are we disciplined, but giving ourselves just a little friendly reminder what we're about, what we got to do. I always keep this mantra myself, because I always want to make more money sometimes than I need to. Like if I'm up $2,000, today I was screaming at my business partner, Tim. I'm like, I was up a couple $1,000. He goes, you got to build the slides for this webinar and do this thing and see if everything's good. Maybe you should quit. It's 11 o'clock. Like you're going to have the day off, go to the beach. And I'm like, no, man, like, let's make a little more. And he's like, come on, man, you got stuff to do. I got to always remind myself, $500 a day keeps the cubicle away, right? $500 a day keeps a cubicle away. So, part of discipline is understanding that, we're always going to make mistakes, but we just got to do our best to remind ourselves and build good habits. That's going to be really important. Then, of course, poor preparation is, frankly, the worst reason. I've been doing this now a long time. I go through on my TC2000. I'm looking up 500 charts to 1,000 charts a day, studying them, doing my trade journals. To this day, I'm doing trade journals, right? I'm logging my trades, looking at them, seeing what I did right, seeing what I did wrong. After all these years, if I'm still doing that, and you're like brand new and you're not doing that, how could you beat me? How could you be better than me if you're not willing to put in? So hard work just gets you into the door. Hard work puts your foot slightly inside the door, but then you still have to go out and pound the process every day. So if you can't even do the minimum work, it's going to be really hard to get going for the bigger and better things. So the poor preparation is really everything. The reason people always say they don't have confidence when they trade. Man, I don't have the confidence. I don't know about this. I don't know about that. The poor confidence just comes from not having competence, right? Competence leads to confidence. Yeah, when you're freaking good at something, woo, you're confident, right? When you've done your preparation, you're confident. One of the things, and remember, guys, for those guys joining our new boot camp, right? If you need the TC2000 layouts and stuff, let Josh know. Put in your email, phone number. We'll get that to you. First thing you want to do every single day, run your liquid gainer scan, right? Run your liquid gainer scan. Second thing you do, run your top loser scan. Get into your go-to stocks, and then on the weekend, go through the 90-day Momo scans. The 90-day Momo scans are great on Sundays to kind of prepare you for the week on what's hot. But going through all these scans, I mean, that's, for me to get through 1,000 charts might take 20, 25 minutes, right? When you're new, it might take a little bit longer. But that preparation is what gives us the pulse for what's happening in the market. So our boot camp is designed as a solution to get you guys where you need to go for this. By the way, remember, if you just alone run your liquid gainer scan and your go-to stock scan every single day, you will have enough stocks to not only figure out what you're supposed to trade tomorrow based on the patterns we're going to teach you, but more important, you're going to be able to reverse engineer what happened on particular stocks. So I always do this, so this Boxel went up, right, today? So if I'm running my liquid gainer scan, I got you, Marco. It would be a pleasure to have you in class, right? It'll be a pleasure to have you in class, of course, right? So if I saw this Boxel, even though I'm just going through my scans to find out what I'm trading tomorrow, what I'm doing is reverse engineering how I could have got into these stocks today. I'm mentally rehearsing how I would have been a champion and got into this and made the money I need to make today. Why didn't I get into this? How could I have got into this? And those mental repetitions are going to train and visualize your brain so that when you're seeing it in real life, when you're seeing it in real time, you don't freeze. You pull that trigger, you make your money, you put in the bank, you go have some fun, you live your life the way you're supposed to live your life. But the only way you can get there is through that preparation. The only way you can get there is through that confidence. And when you roll it like that, there's nothing that can stop you because you have done that work. And that's going to be the hugest thing that we've got to do. So anybody that's coming in, remember all those things. Guys, trading, frankly, it's one of the best professions out there. Oh, man, it can be hard to learn. Why is it hard to learn? When you think about professions like being a doctor or lawyer, they have classes and universities that have been set up for hundreds of years to teach people how to do that job, right? If you wanted to be a physician, they have been teaching people how to be physicians for 1,000 years in all different countries, right? There's a practice, there's a method on how to teach different things, engineering, any of these type of things. Now, of course, they're always getting adapted, but you know what I mean. But for trading, there's nobody really out there teaching people how to do it the right way, doing it in a university style setting, right? Which means classes. It means homework. It means a mentor that picks up your phone call, right? It means somebody sometimes barking at you, right? That's the stuff that you need sometimes to get better. And there's only a handful of people out there like that, right? So having the foundation and tools for this stuff is going to be really, really important. And the most important thing, I think, is when you have mentorship, it can't go on for 1 week. Can't go on for 2 weeks. You know, our classes, they go for life. Our classes come into our live classes. So I have a 60-day boot camp. My students can retake it for life. I'm on boot camp 42. So imagine, I've done 60 days of class 42 times. I've been teaching this class a long time. Our students know there's only a few things certain in life: death, taxes, and that's 60-day boot camp going on. Sunday, Tuesday, Wednesday, Thursday. That's the only way you're going to learn, because it is a lifetime process. Think about this, no matter what age you are. If it takes you a year, it takes you 6 months, 2 years, whatever it is, how long are you going to be investing in yourself? There's not going to be Social Security around, right, in a handful of years. No pensions around. You know, we're in charge of our finance. You're going to be working on your finances your whole life. So spending a handful of months, even an excessive class, and mine's demanding, it's excessive because it's damn 60 days. But it's worth it because that's what we need to do. So you get 28 live classes via webinar. Each class is recorded, archived on a page. And you know, so, and you have lifetime access to all that. So like if you go on the Bulls on Wall Street, you know, website, you know, what you'll see is on our 60-day, I got you, Andrew. On our 60-day bootcamp course, you'll see all your quizzes, your homework, your registrations, and every single class you need to see. This would be our last one. And then you can even go and watch the boot camps from 3, 4, 5 years ago. And you can come into live class as many times as you want. And that's important because, you know, sometimes we think we just watch a few hours of videos, we deserve to do what? Make hundreds of thousands of dollars a year? Come on, right? But if we spend months learning something, can we get good at it? Like I wouldn't be any good at any of your jobs. But man, if you gave me 60 days or 90 days, I might be able to at least be proficient, right? I won't be the best, but I could get in the game, I hope. Now, along with our bootcamp module page and everything there, at the end of the trading day, I do these market recaps. So we actually go through all the trades I do. So I whip out, you know, my P&L, and man, some days I win, some days I lose. You know how that goes. But you know, we talk about it. And I trade live on webinar in front of my students in our chat room every single day. So I'm calling out the plays I trade, and I'm on webinar, so you know, you don't have to follow the typing and stuff. But you know, I'm coming in here and I post my P&L of how much money I made and lost every single day, and we review the trades. So what happens is we start to marry the nighttime classwork with the daytime real-time learning. And it's the only way you can really learn. See, in book knowledge and trading knowledge, every single chart, every single slide is cherry-picked for the easiest, best one. Right? We know in real life is messy. It's bloody, ain't it? It's a war sometimes. And so when you're trading and you're like, gosh darn, man, it doesn't look like what it did in this guy's, these guys' slides. Well, that's why I trade in front of my guys every single day, right? And so while we're in boot camp, you guys are watching me trade, and I'll do all that fun stuff. Then you know what? We use our TC2000, and you guys are going to go in the trading simulator once we're done with class. I'm going to start monitoring your trades. You'll have access to journals where you can post your trades. The key to figuring out how to trade, guys, this is so important. having somebody grade your trades, whether it's a buddy or somebody like me, is so important because you're going to make mistakes. But the thing is, if somebody has the guts to tell you that you're making a mistake, that's great. But if somebody has the balls to tell you the second time, man, you make this mistake again, I'm going to beat your ass, then you learn, right? I have tons of my students, man, they're about to do something, and they're like, man, I was about to dupe. I knew you were going to get all up on my shit about it. And really, like, just the fear of knowing that one of their teachers was going to see it and just rip into them. And I'm not a ripper, but you know what I mean? Sometimes I am. But just knowing that accountability can help you build up habits. So it's like say you're making a mistake 2-3 times and I catch you, and that third time you know it's coming, the rain's coming, right? You're going to think twice when you pull in that trigger to say, you know what, I don't think I should do this. And yeah, it seems childish, but man, that's a great way to learn because that's what teachers are, right? That's what the whole point of having a teacher is. And I think that becomes really important. I got a 200-page course book, a physical course book. Man, it's thick like a 16-ounce ribeye, heavily salted and peppered, of course. It's amazing. So you'll get that with it. Bonus, I do live events all the time. Dallas, we're going to do one in Atlanta this year. You'll have a ticket to a live event. It'll be a 2-day in-person workshop. No fluff, just trading strategies. I'll have 3 or 4 of my guys with you. We'll have small rooms, and we'll get that going. Probably a few months, Arabi. I would say maybe March. I'm talking with the W Hotel. You'll have access to our day trader chat room. Remember, so you can watch me trade. You'll have access to our part-time trader service. Our part-time trader service, I know a lot of you guys are swing traders, right? Who here's a part-time trader? They got a job. They can't sit in front of the computer all day, watch me on screen share. Yeah, of course, right? I started trading. I became a full-time trader while I had a 13-hour-a-day job. When you have that type of job, you have to make enough money part-time trading to quit your job. How do you do that? Swing trading. Trading for 1 week, 2 weeks, 2-3 days sometimes. When I started Bulls on Wall Street, I was only doing part-time trading or swing trading. I'd hold 3-4 stocks, and I hold them for 4 or 5 days. I tried to take 10, 20, 30% gains if I could, and the market was hot at the point. And that's how I built up my account. You don't have to day trade. I teach 5 swing trading classes out of our 28. 5 of them. You will have 10 hours of instruction on swing trading. And we also have a service for part-time traders. So during this time, during our boot camp, you will have nightly videos and alerts to swing trading. So your part-time traders, every night, we make a video and we put in what we're watching. And we actually do the notifications and alerts. And you'll get them emailed and texted to you by my mentor, Paul, who taught me. So you'll be able to get them on your phone and see what the heck he's up to and follow along, which is actually pretty cool. Guys, we're going to run this for $25.99, but for the first 5 people, I will do it at $2,300. All right, for the first 5 people. So type in your name in the question section, and I'll make sure to get you all this. Remember, it's not just the boot camp now. We're talking about a live event, annuals and day trading, part-time trading. We do have payment plans. My guy, Omar, he's the man. You can call him Omar Deluxe. He's in Dallas. He'll work out a deal with you guys and make sure that, you get the tuition assistance and everything that you need. This is his number. That's his email. But put in your phone number, and I'll make sure to put on a spreadsheet, and he'll give you a call, and we'll get that pate started. Mari, yes, swing trading is the way to go when you're working a lot. And then, you know what? You'll find parts of the day where you can day trade and stuff once you get the juice in swing trading. I'm a firm believer you got to do both. Day trading is for income, Swing trading's for building wealth. Yeah, so for anybody that's foreign or out of the country, you can put in your Skype or your WhatsApp or whatever, and we'll make sure to go. I am not, we don't run this special most of the time because the live events usually pack up. So like, I can only have, so I don't do live events with like 500 people. When we do live events, there's gonna be 30 people max in there. So that's why, we just do the deal sporadically, because you can't have a live event, like a teaching event, where where you're doing in person, if there's 500 people. So, we just kind of do it this way sporadically since it's the beginning of the year and kind of all that fun stuff. Tomorrow's agenda, we'll talk about what we trade every day, an advanced strategy that I use at the open to make money, proper technique for entering and exiting trades. We'll kind of reverse dive and dive into the nitty gritty of what we need to do. We'll talk about some real life trading examples. We'll dissect the trades I do tomorrow, figure out what's going on, good or bad. Hopefully I make a little money, right? And we'll do a little Q&A. Guys, if you have any damn questions, you know how to find me. I'm Cadal00 on the Twitter, the Instagram, all that kind of fun stuff. Or you can contact me directly via email or phone. My cellular is 974-1480. That's actually my cellular. I know you could send me a text. Let me know how you're doing. I got this thing up right now. We'll get this pate started. Hey, I appreciate it. Hey, no problem, Mari. Paul, we'll be talking about how to trade the open tomorrow, and then we'll talk about VWAP strategies. Man, nobody even texted me yet. This is so messed up. Yeah, guys. As always, let's open this thing up to some questions, and we'll get this party started. As always, I appreciate you guys. Same time, same place. Anybody got any questions? Sure. So a couple people answered. So the boot camp is, what's the difference between the boot camp and the live event? So the boot camp, so you're gonna get both, but the boot camp is essentially, right? It's all via webinar like this. The live event is, we'll pick a city. We do Atlanta, Dallas. We'll do something East Coast, West Coast. So we do one a quarter. And you can fly in any one of them if you want. Stay at a hotel. We can go out. We can do our thing. And then from there, we'll do a 2-day workshop. It'll be literally trading stuff. We'll have one day where I'm trading live in front of you, literally standing next to you guys. And then we'll do a Saturday where we're just diving deep into strategy. I'll have some of the people that work with me talk about some of the stuff that they do. So it'd be probably me 10 hours, them 4 hours, something like that. Good question. So yes, our boot camp is live, but it's live via webinar. And our live event is live, but in person live. Good question. Anybody else? Good. Somebody asked how many people will we have in the next boot camp? We're anticipating probably 30, 40 people into the boot camp. That's all I could fit into the live event. Yeah, we'll run the deal for the first 5 people, and then it'll be $25.99 after. It's easy, $5,000 or whatever. Omar hook you up though. He's a good dude. He's from Turkey, so he's a deal maker. Don't worry about that. Hey, Nicholas, what's up? St. Louis, what's up? Man, is this Hulk Hogan? Yeah, that's awesome. Hey, Nicholas, good to see you, brother. Yeah, I am from Detroit. Well, suburbs of Detroit. Cool. So a couple of people are asking, what's the minimum amount you need to start day trading? Day trading, when you start day trading, like you want to at least have a $2,500, give or take, to just start. You know, you'd be making more selective trades like here or there, and then you start building up your account and get a little bit more aggressive. Kind of, Paul. Word document. I got you. Later, Nikki. Chat rooms for 1 year, my friend. Yes, Julius, we will do a live event in Dallas. You know, my business partner Omar is in Dallas, so it's the easiest spot for everybody to get to. But I got you, Mike. I'll work something out with you, Mr. Seabrian. Of course. I want to make you just add on all that stuff. Hey, Nicholas, you are, you know, anytime you want to watch me trade, I'm on Bulls on Wall Street trading in this chat room every single day. You want to watch me trade and crush it? Come on in, Acosta. Taylor, no, I don't. Taylor's asking, like, do I offer just a course book alone? Now, I don't personally believe, just a personal note, that you can learn trading from a book. So I'd almost be doing you a disservice trying to sell you a bunch of pieces of paper. Dion, good question. So Dion's asking, like, if you're brand new, like, where does one start? Dion, best place to start is, of course, finding out, like, what kind of strategy you want to do. Like, are you short-term swing trader, short-term trader like me, which means day trading, swing trading, or are you an investor, like you're trying to hold for 2 years? Narrow it down. All right. If you're a short-term trader like me, which is you're doing day trading and then like kind of like those 3 to 5 day holds, then you're going to go with this strategy, right? Or some other something in that realm. If you're a longer-term investor, then you're doing more like, you know, Warren Buffett stuff. And then you're going to start narrowing down. Okay, so who are you going to model after? All right, I'm going to learn these things they do. I'm going to fine tune it. I'm going to practice it. Then I'm going to take some notes and redo it all. And you're going to put it all together. Thank you, Darren. Appreciate it, brother. By the way, guys, I do start everybody off at the dead beginning in our boot camp class. So like if you've never even looked at a stock before, you know, the first couple days I'm walking people through literally like if you had never seen one before. So we just build a strong foundation. We'll even do some pre-beginner stuff like before like class starts, just so you have somebody to work with to kind of get you the basics down, and then we'll build from there. One thing about our company is because like all the people that work at our company have been trained by me. They're all traders too. I've got a lot of people that can help out with just questions, the nitty gritty. You know, sometimes you just need to get somebody on the phone, right? It's like, I'll tell you what, if you can't get your mentor on the phone, is he even your mentor? Heck no, right? If you can't get him on the cell phone, that ain't your mentor. You're just paying that dude. You know it, Munu. Hey, Derek, good question. Derek saying, how's the tax situation work? Derek, in life, in America especially, you pay taxes no matter what you do. You can pay taxes you work. You can pay taxes you trade. You can pay taxes you do business. I always go with the thing of you never want to not make a bunch of money to get out of taxes. It's just too backward. And by the way, you know, you can set up like an LLC for taxes and stuff like that. You can like write some things off, and you know, in the end, you can, like in any business, you can lower your tax bill a little bit. But I mean, to live in the greatest country in the history of the earth, you gotta pay your taxes. Otherwise, right? You just hang out in Pakistan and don't pay taxes. See, we'll see how we all like it. Yeah, I tend to answer text messages in general. Yeah. Y'all have my number now. That's my cell. Good. Anybody else? Speak now or forever hold your peace. Munu, I'm just teasing. Hey, Oksana, good question. So Oksana's asking, like, what's your favorite stock to trade? Yeah, it changes kind of month by month. There's always like stocks that are like running around that, we trade a lot. Over the years, I've traded like this Twilio a lot or Roku a lot. But they change depending on like right now, like this Twilio hasn't moved in months, right? So like I wouldn't be focused on it, but when it was really moving, I would be. Javier, I trade TVIX pretty much every day. So that's always on the watch list. And this DoxX was just a earnings gapper play. So this one showed up because I had a PR out. Araby, I don't believe we're in a bear market. Hey, Rajendra, TC2000 doesn't have it doesn't have Indian stocks on there. It's just for like American stocks, but you could use TradingView. You could use TradingView for American stocks or Indian stocks. Rajendra, I got a bunch of students that trade in the, what's it called? The Nifty? Is that what it is? Nifty. And they use a TradingView, and there's some other ones too. I got you, Mari. Hey, Sam, good question. Sam was asking, guys, do you trade in the first half hour of the market? And yeah, I do. That's where all the action is. It's also where my biggest losses have been. When I was a new trader, man, that first half hour of the market would just cost me so much money because there's so much volatility, but there's also power there. And if you can figure out a way to corral it, to harness that power, then you don't have to sit around the rest of the day and make stupid trades. You could trade shorter time frame in that first hour or two and make your, day's gains. And so it took a little bit of time. Once I narrowed down that first half hour into specific strategies and patterns, then it became much easier to trade without really having crazy risk. Surab, how you doing? If the stock is resistance at 250, current price is 380, do we still buy for the swing set for the next resistance 380? Only if there's a price pattern at 340. So there'd have to be something, specific, like a flag pattern, flat top pattern, moving average, pullback, something along that end. Araby, what about the last half an hour? Yeah, I mean, I can trade anytime I want. It's more a matter of do I want to? Mike, if you're coming into boot camp, you won't need any of the free courses on the website. I'm going to walk you through all that stuff in better detail. Robert, so are me expecting set rules tomorrow how to trade first hour? Yeah, if you're lucky. Sam, how is a pre-market price, post-market related to intraday price? Sam, that depends on the pattern, the type of news, and also the type of market. Also, you'd have to take in the gap into account. big gap, little gap. Does it take out of the range, not out of the range, where the daily chart is? And of course, you have to measure where the S&P and the QQQs are. I got you, Mari. Ebi, how you doing, my brother? I never trade pre-market, by the way, Samo. Do you consider the in-between highs, lows, support, or would just be the test at 34? Edward, you've been with me for a long time. I mean, like I don't like playing stocks that are stuck in the range. So ideally it's got to be moving. Hey Matt, how you doing, Mr. Johnson? TraderView is just something that I use for journaling. It connects to your broker and it just uploads your trades, and then you can leave notes, tag them, and all that fun stuff. Taylor, good question. Taylor's asking, how often do you trade leverage ETFs? I mean, it's not like my sole strategy, but I'll probably do it every day. Good. Anybody else? Opening range, 5 minute, 10 minute, 15 minute. Done. The opening range is really the first hour. I tend to trade on 5 minute charts, but I will vacillate if I need to get in quicker. If I get the gut feeling a stock's gonna move fast, I may go to a quicker thing. Hey Tim, good question. Tim's saying, what's the difference between the TC2000 trade ideas? Tim, I'm doing the trade ideas just to get the gappers, to be honest. Everything else I do in the TC2000 just because I need the charts. Oh, Sam, you're such a philosopher. Sam's asking if you would give one advice for new traders, what would it be? Yeah, I would definitely say don't ad lib probably the process, in terms of how you jump around. The beginning phases of your trading are so important. Find, whether you find a mentor or not is beside, has nothing to do with me, but find a system that you're trying to do and then learn every single thing about it, like the stuff they don't cover in the course books, right? Like the nitty gritty of that stuff, and find out friends or people that know that stuff. Get into it, build out a recipe for each style of trading that you do. So you got XYZ pattern, what's the recipe for it? This pattern, what's the recipe for it? When you have a recipe for each type of your pattern, you can start fine tuning the process much better. And then you can really, really hone in and build excellence. But if you start to ad lib on that and you just start going and just learning stuff and doing random shit, man, you're just piling junk on top of junk. And then some of it might be good, but then it's going to be in a layer of junk. And guess what? If you have a strawberry shortcake in between 2 layers of shit, it still tastes like shit. Michael, do you trade in a ranging market? Michael, I could trade any market because in a ranging market, there's still going to be 10% of stocks will be trending up or down. Yeah, Derek, you can trade small caps. Small caps is the only thing I traded for a lot of years. Yeah, Roku still looks okay. It just hasn't gone yet. It's just hugging along. But, it's still in the game. The problem is it's not really a trender, right? It's still stuck in range. So that's why it's acting like that. Why the 9 EMA as opposed to the 7 or 9? Mark, friend, that's a good question. I just found that's what my mentor told me. It worked, so I didn't question it. My mom always told me milk was good for me.